the people who least deserve to be hurt by this are the ones who get hurt, like regular consumers who trust the government, for instance, who own a lot of cash and have government bonds in their investment savings portfolios, and who are trying to get by day to day. They're working at their jobs, they're trying to pay for their food and gas and things like that. Well, those things are going to go way up. Life is going to get much harder for you if you're sitting on a pile of dollars which go down in value while the things you need to spend. Well, the gold and silver story was always, for the past 20 to 30 years, been that the big countries of the world, now that they're doing fiat currency experiments where their currencies aren't backed by anything,
Right.
and they have unlimited credit cards effectively to borrow and spend as much money as they want to, they're abusing that power and taking on way too much debt, creating way too much currency to finance that debt, and that would eventually lead to inflation, which is to say a disorderly decline in the value of the big fiat currencies. And we're finally there. This morning, as we're speaking right now, gold and silver are both way up, and silver is outpacing gold, which is normally how the late stages of precious metals bull markets go. You begin with gold because that's the big name in the sector. When you're nervous about what currencies are going to do, you buy that gold, the gold goes up. And then you realize that for the 1 ounce of gold, you can get a whole pile of silver, and your aesthetic sense takes over. You want that big pile of really gorgeous coins. And so people start buying silver, and that, being a very thinly traded market, starts to go straight up. That's where we are now. So the question is this a gold and silver run like the previous two in, let's see, 2000, yeah, in 1999 and in 2007, 2008. Anyhow, the
Yep.
past two long precious metals runs we've had gold and silver topping out. Well, gold not quite at this level in real terms, and silver at $50 an ounce or so. So the question is now: is this move like those moves, or is this one a very different animal because this is the end of the fiat currency experiment? And I would argue that, yeah, the latter probably, that we're towards the end of the experiment now because governments are just awash in debt. The interest on their debt is soaring. The US pays more in interest now on its debt than it pays for defense.
Mhm.
You can't manage something like that for very long. So we're in the death spiral part of the process. And that means gold and silver are probably good protection from currency crises for a long way to go from here. This isn't a time to be cashing out. This is still maybe a time to be adding cautiously to precious metals positions because we could see some really outrageous numbers, certainly in gold and definitely in silver in the not too distant future. And you want to be there for that. You don't want to miss the big parabolic move at the end.
In past precious metals rallies, gold surged first whenever currencies wobbled. Then, once panic deepened, silver followed, often with far bigger gains. That pattern is repeating now. As confidence in fiat currency fades, many choose silver over gold, both for affordability and as a symbol of hard money. With fewer traders participating and many long positions already saturated, this isn't fueled by speculation. Instead, it's a structural shift. Real demand for real metal as a hedge against inflation, currency collapse, and systemic financial risks.
Well, governments have screwed up their currencies since we've had currencies.
Right.
A government will start borrowing too much money, and then debasing their currency in some way. And then people lose faith in the currency, its value collapses. And then each and every time we've gone back to gold and silver because that's humanity's original money. And it can't be debased because you have to dig precious metals out of the ground. And that's hard and getting harder to do all the time. So that limits the supply of those things. And because they're rare, they tend to hold their value going forward. And that's where people pile into when they suspect that their government is screwing up their currency. Now, what's happening now that's different is that in the past, currency crises used to be one country devaluing their currency dramatically. In the context of the sound money world, everybody else was on the gold standard. You screwed up your currency. You have a crash, and then you go back to gold and silver. Um, well, now it's the whole world, basically, or at least all the major countries. They have fiat currencies. They're inflating them away at varying rates. And so this is going to be different in that sense, in the sense that it's a global currency crisis, because, if the dollar starts tanking, that pulls down the euro, that pulls down the Swiss franc, the British pound is going to crash no matter what, and the Chinese yuan is being inflated away really aggressively as well for their own reasons. Yeah, so all of these things are going to happen kind of simultaneously once they get going, and you can make the case that they're already happening.
Right.
That we had this burst of inflation during our response to the COVID pandemic. So the cost of living is already much higher than it was a decade ago. And so they're hoping for like 3% inflation in the US going forward and thinking that fixes things. But it doesn't actually, because most people's cost of living is already way up. So having it grow by only 3% a year is still a crisis for the average person. And, we've got a recession coming, which we can talk about the details of that in a minute. But let's say a recession happens, governments usually respond to recessions with dramatic increases in spending, which means if we're running $2 trillion a year deficits now, we'll run $3 or $4 trillion deficits in the face of the next recession. And that'll just spike interest costs, which they have to be borrowed. So that will spike next year's deficit, et cetera, et cetera, as we enter a death spiral where the currencies just start to fall off a table. And I would say that we're basically there. We're at the beginning stage of that, and there's no way out of it. So yeah, fiat currencies are currencies that allow governments to do this, basically. In other words, they're not backed by anything, so governments are free to borrow and spend as much as they want. We started that experiment in 1971, and it's kind of come to fruition now. So the question is, what happens after? Because it's kind of guaranteed that we're having that big currency crisis. So, do we do a currency reset where we go back to a gold standard? And do we bring Bitcoin into the mix? Or do we just, run it out and have kind of a Weimar Germany hyperinflation that nobody can predict the outcome of, and hopefully we'll do the smart thing, which is a currency reset sooner rather than later. But when have the guys in charge of most of the big countries done the smart thing in our lifetimes? And the answer is almost never. So it's completely possible that we have just a horrendous currency/financial crisis in the not too distant future, and we basically just have to live through that. And right now, we should be trying to prepare ourselves for it.
Past currency crises hit one nation at a time. That government printed wildly, its currency collapsed, and citizens turned to gold or silver. This time is different. Nearly all major economies, USA, Europe, China, are on fiat currencies and carrying heavy debt loads. Inflation, devaluation, and monetary debasement are happening simultaneously around the world. A crash in the dollar will ripple through euros, pounds, yuan, and beyond. In a world where every currency is weakening together, hard assets become the last refuge. Silver and gold are emerging as global safeguards.
Well, here's a scenario that seems like it could play out very easily. We're already kind of tipping into a recession because Americans and most of the rest of the world, at least the developed world, um, they're running out of money. Credit card debt is at all-time highs, and the interest on credit card debt is in the mid 20% range. So anybody who's carrying an ongoing balance is being just drained dry by their credit cards. And there's a growing number of people in that situation. Student loans are now having to be
Yeah.
paid upon, and a growing number of borrowers are starting to default on their student loans because of that. Car loans, same thing. The delinquency rates on these subprime car mortgages that people have been taking out in the last decade are spiking. So basically you're not going to see people go out and spend a lot of money in frivolous ways because they've already done that and now they're paying a price for it. So you're hearing, companies like McDonald's, other fast food places say, nobody's coming in for breakfast anymore. They're either eating breakfast at home or they're going to convenience stores and buying, shrink wrapped breakfast burritos at 7-Eleven or something like that, which is,
Hmm.
it's a horrifying thought that people are having to do that. But when people can't afford fast food, that's a sign they can't afford much of anything. So expect consumer spending to trend down in the year ahead, and we're a consumer spending driven economy. So expect the economy to slow down and then drop into negative territory.
Hmm.
That will cause an equities bear market because equities tend to fall during recessions because corporate profits fall during recessions. And since we're wildly overvalued in equities right now, we've got a major equity bubble, and let a downturn begin in equities prices, and it's liable to just turn into an avalanche. So we'll have a huge equities bear market, maybe a crash, and then the government will have to step in and start bailing out the sectors of the economy that may be broken by an equities bear market and a recession.
Hmm.
And then people start looking at the extra $5 trillion that the government is having to throw at all these broken sectors in the economy. And they'll start wondering if that means the currency is becoming worthless. So nobody will want to hold US bonds, and that'll spike interest rates. And then boom, you get a Federal Reserve with no tools left to fix anything. Financial markets who absolutely do not trust anything the government's trying to do in any event,
Hmm.
and a currency crisis. Nobody wants to hold dollars. There's a thing called the crack-up boom in the Austrian
Hmm.
School of Economics that I'm kind of describing here.
Hmm.
When people, a critical mass of people, lose faith in a currency, they just start dumping it. As soon as they get paid, they buy real stuff with that currency. So you see the price of real things like farmland and gold and silver and oil and yada yada, go through the roof, which is to say the value of the currency relative to those things just crashes. And then, that's it for the currency. People give up on it. And then something has to happen at that point. And, we'll see what that point is. But I think, the scenario I just sketched out, each of those things follow logically from the previous thing. And that takes us to, let's say 2029, something like that. And the whole system is broken. So we'll see. But that's a very plausible scenario.
Even before a full collapse, rising interest rates and surging living costs are crushing many households. Credit cards, auto loans, student debt, defaults are rising. Consumer spending, the engine of the economy, is shrinking. Fast food breakfasts disappear, spending on small luxuries vanishes, and frugality becomes the new normal. With recession looming, corporate profits fall, equities slump, and unemployment rises. Governments respond with spending, deepening deficits, igniting debt spirals. As money loses value, wages stagnate while essentials climb. For ordinary people, this feels like nothing less than a slow-burning crash.
Uh, I thought that was
Well,
well said.
yeah, and it is well said, because think back to the 1970s. We've already had a version of this, only a really mild version, but
Hmm.
we had spiking inflation back then, and life got much harder for people. Energy got super expensive, food got expensive, and we thought for a little while that the dollar was dying at the time.
Hmm.
So this is a much more serious version of that because the numbers are all way bigger and everybody's much more deeply in debt. But yeah, the people who least deserve to be hurt by this are the ones who get hurt, like regular consumers who trust the government, for instance, who own a lot of cash and have government bonds in their investment savings portfolios, and who are trying to get by day to day. They're working at their jobs, they're trying to pay for their food and gas and things like that. Well, those things are going to go way up. Life is going to get much harder for you if you're sitting on a pile of dollars, which go down in value, while the things you need to spend those dollars on go up in value. And that's just the way those things work. And then, of course, you get political chaos when that happens, because if people are being just bled dry by an economy that the government engineered, then who wants that government in power anymore? So the peasants will pick up their pitchforks, head to the castle, and pull the aristocracy out. Hopefully, only in a financial way, but maybe in a physical way too. You just don't know. So
Yeah.
we get kind of a French Revolution scenario going. Well, on the financial side, you want to shift your finances out of financial assets. In other words, things
Yeah.
that governments can inflate away and into real stuff, so
Yeah.
gold, silver, farmland, et cetera, et cetera. And as far as your life goes, um, that's a big intellectual challenge right now in the age of AI.
Hmm.
But interestingly, if you're 18 years old and you're looking for a career, for the longest time now, people have been starting. They used to say learn to code, but now people are saying learn to plumb. Become a plumber, learn to do electrical work, things like that, because the physical stuff that AI can't do is what is going to be in demand for the longest amount of time. The handyman shall inherit the world, and so that's very good investment or career advice right now. And it's the exact opposite of what you got for the past 30 or 40 years. So yeah, and if you've got a job, you want to make yourself as indispensable as possible. And that means don't just show up, do your 8 hours and leave. Look around at what your bosses want and what would make them happy, and be the person that supplies that for your bosses, because then you're the last one laid off when things get really crazy. And within your community, you don't want to be this loner with a bunch of gold coins and a shotgun, because you're easy pickings if
Right.
that's who you are. So you want to be part of a community, however you define that. But you want people who have your back, and you want to have their back, and you've got a much better chance of coming through the future disruptions in good shape if you've got people. So throw
Yeah.
all of that together, and what you end up with is kind of the prepping lifestyle. Really, a lot of what our grandparents did just naturally, where they were part of a community, they had a garden, they saved real money, and they considered land a very valuable thing to have. All of a sudden, those things are back in style now in a big way. So, you look at what the price of homestead type land has done in
Hmm.
the past 15 years or so. It's gone through the roof. And you
Yeah.
look at what the billionaires are doing. They're buying farmland. Bill Gates is the biggest owner of farmland in the United States right now. So, a lot of people are out there providing examples of how we should live going forward.
In times of monetary collapse, financial assets become fragile. But real things don't lose tangible value. That's why increasingly people turn to farmland, real estate, and metals. Gold and silver endure, farmland produces food, and land rarely disappears. Billionaire investors and everyday households are both rediscovering the value of real assets. In cities or rural zones, growing food, raising livestock, and building real-life resilience is becoming more than a lifestyle. It's a survival strategy. Real assets offer security in a world where currency is just a vulnerable debt promise.
As far as being able to grow, let's say 20 or 30% of your own food, which is a really good goal. The more urban you get, the harder it is, obviously, and the more you're at risk. If there's a disruption in the food supply chain and you're in downtown San Francisco or someplace like that,
Good
there's
luck.
only so much you can do.
Right.
You're looking at a very stressful time. But there's still things you can do. There are window gardens that people do in cities, and most suburban houses have backyards, right? So you
Hmm.
take an eighth of an acre of your backyard and turn it into a garden and do it right. Learn how to do raised beds and things like that, and you can still provide some of your own food. And even if it's not 50%, 10% is still something.
Hmm.
And if you're in a place where you can get chickens or something like that, that's the new in thing, right? Everybody owns chickens because they will
They're
happily,
easy.
yeah. I mean, they'll eat your kitchen clippings and the stuff that you would normally throw into a compost pile. You give to the chickens, they'll eat it. They'll give you eggs in return, and so
Yeah.
that's a really high protein way to recycle.
Yeah.
So there's a million things you can do. And rabbits, I'm hearing a lot about here because they reproduce very quickly and they provide a lot of meat. So,
Uh-huh.
this is all stuff that maybe sounds horrifying or maybe sounds too complicated for a lot of people. But for a lot of other people, it's like, oh, I've been wanting to do this forever, and now there's a really good financial reason to do it. So yeah, there's an awful lot you can do, and then there's the whole self-defense thing. You should probably be able to defend yourself in some way, and if that means buying
Absolutely.
a couple of guns, learning how to use them, uh, not a bad time to pick that up if you've ever wondered if you should be doing it. So
Hmm.
the basic prepping thing has an awful lot of good advice for today's millennials and Gen Z people. I think they should be looking into this now as a way to get through the next 20 years.
We're likely at the early stage of a global currency crisis that could unravel over the next decade. That doesn't guarantee chaos, but it does demand awareness. Cash savings, long-term government bonds, and paper investments may be fragile. Meanwhile, gold and silver may serve as stable anchors. Practical skills, gardening, tradecraft, community building may matter more than ever. Diversified assets, self-reliance, and broad-minded planning may carry many through. If history is any guide, being prepared and shifting toward tangible value is not paranoia, it's prudence.